Very good morning. So, yesterday we started with the chapter of profits and gains of business or profession. In that, without discussing anything, If the asset is used for, maybe I can divide this into 3 parts instead of 2. Use of asset can be divided in 3. Asset is used for business or profession purpose. In that case, depreciation reduction will be allowed. Second possibility, asset is used for personal purpose. What will happen in that case? Depreciation reduction will not be allowed. Correct? Last possibility, asset is used partly for business profession and partly for personal purpose. In that case, what will happen? Depreciation reduction will be allowed proportionately for business profession use. The extent to which the asset is used for business or profession, only to that extent you can claim deduction of depreciation. Is that very clear? That is what you have to find on a judgmental basis. For example, say for example, and third asset must be used during the previous year. I already told you that once you install an asset, it is always used either actively and passively, and active as well as passive use both are eligible for depreciation reduction. So here we say that if the asset is used partly for business purpose, partly for personal purpose, partly for business, partly for personal, then what will happen? SEC can claim deduction for depreciation proportionately only to the extent to which the asset is used for business or profession purpose. Is that very clear? Number two, depreciation deduction is available irrespective of nature of use. Depreciation is deductible irrespective of nature of use. Means active use as well as passive use. In both cases, you can claim deduction with respect to depreciation. So this point A, B both are over. Point C, even if the asset is used for few days during the previous year, depreciation is deductible for the entire year. That is what I had explained you yesterday also. And the last point here is, this is the most important point. First of all, I'll explain you, I'll make you understand. Thereafter, once I complete this point, I'll ask you if you have any doubts. So generally this would happen in the class, saying that everyone says, no, sir, we have understood. But when we move on to illustration, 100%, there are brighter chances that most of you will do the mistake. So you need to be very alert right now. Point number D talks about proviso to section 32 subsection 1. It talks about what? Proviso to section 32 subsection 1. Proviso says that if an asset is newly acquired during the previous year, I am not talking about all the assets, I am talking only about the asset which is newly acquired during the previous year. So first of all, asset is newly acquired during the previous year. Number two, that asset is put to use, that is installed in the previous year itself, current year itself. In that case, if that asset is put to use for less than 180 days, the depreciation deduction would be half of normal depreciation. And on the other hand, if the asset is put to use for 180 days or more, then you will get depreciation deduction for the entire year. As I told you yesterday, either in income tax, either we have half depreciation or full depreciation. We don't calculate depreciation month wise or day wise. So important point number one, asset should be acquired during the previous year. Number two, asset should be installed during the previous year. Number three, asset is put to use for less than 180 days. If all these three conditions are fulfilled, then only half depreciation rule will be applicable. Is that very clear? So let us read this. However, if an asset acquired during the previous year, asset is acquired during the previous year, is put to use for less than 180 days during that previous year. What do you mean by that previous year? In the same year, then only 50% of the allowable depreciation is permissible in respect of which asset? That asset. We are not talking about the entire block of asset. We are talking only about that asset. So on the value of that individual asset, you will get half depreciation. Generally, we calculate depreciation on group of asset, block of asset, but this is an exceptional situation wherein if the asset is acquired during the previous year, put to use during the previous year, put to use for less than 180 days, in that case we will calculate half depreciation only on the value of that particular asset. You should not apply the half rule on the entire block of asset, only on the value of that particular asset. This is the exceptional situation wherein you will identify that single asset separately. Generally, we don't recognize the single asset, we recognize the block of asset. But in this situation, this is an exceptional situation. In this case, we would recognize the single asset separately. Is that very clear? However, this restriction is applicable only in the first year in which asset is acquired and is not applicable in the subsequent year. I have read the paragraph. You might feel that you might have understood, but still for more clarity, we have one more diagram here. Life of asset. See, life of a human being can be divided in 3 phases. Life of human being can be divided in 3 phases. Phase 1 is year of birth. Phase 3 is year of death, and between them it is time pass. So, 3 phases. Phase 1, year of birth. Phase 2, time pass. Phase 3, year of death. Similarly, life of an asset can also be divided into 3 phases. Number 1 is year of acquisition, the year in which you have acquired the asset. Last year would be the year of sale or year of disposal of asset. And between these 2 years, all the years are called as intermittent years. Intermittent years means between 2 years. So, we can divide the life of an asset into 3 phases or 3 parts. Number 1 is year of acquisition, number 2 is intermittent years, and number 3 is year of sale. In income tax, you don't get depreciation in the year of sale. Why you don't get depreciation in the year of sale? That you will realize when we get into the format for computation of depreciation. If one of the asset is sold from the entire block of asset, whatever is the selling price of that asset, that entire selling price is deducted from the block. Say for example, I am having 50 assets and the value is 50 lakhs. Out of 50 assets, one asset I have sold for 2 lakhs. So from 50 lakhs, I would deduct 2 lakhs. So if I sell the asset, the selling price of that asset is deducted from the value of block. So at the end of the year, the value of the block does not contain the value of the asset which is already sold. Therefore, we say that in the year of sale, you won't get depreciation on the asset which is being sold. I have tried to make you understand. Even if you are not understood, don't worry about that. When we get into the format for calculation of depreciation, it will be discussed much in detail and you will get more clarity. But for the time being, you should remember that in the year of sale, you are not going to get any depreciation. Intermittent years. Intermittent year, you will always get full depreciation. Why? Because in intermittent year, the asset is always used actively or passively. Year of acquisition. You have to decide, you have to see whether the asset is put to use for less than 180 days or asset is put to use for greater than equal to 180 days. If the asset is put to use for less than 180 days, then you get half depreciation. If the asset is put to use for greater than equal to 180 days, then you get full depreciation. See, by mistake, the format, this content, here we have written full depreciation. It is not, it is appearing on the name of the chapter. So you can write there on the left hand side. If the asset is put to use for greater than equal to 180 days, you get full depreciation. Now, what is your previous year? Previous year 2021. Now, when can we say that asset is put to use for less than 180 days? On which date, if you put an asset to use, we can conclude that asset is put to use for less than 180 days. For example, if you put an asset to use on 1st of March, then it is used for how many days? 31 days. 31 days, correct? Yes or no? Similarly, if you put an asset to use on 1st of February, say for example, then February previous year 2021, it is the month of February belongs to the year 2021. So, you will be having 28 days. So, for the month of February 28 days, for the month of March 31 days, total is 59 days. So, if you put an asset to use on 1st of February, we say that the asset is put to use for 59 days. Asset is used for 59 days. Similarly, my question is, on which date if you put an asset to use, we say that it is put to use for less than 180 days. Are you understanding? Okay. So what we can do the reverse calculation. We'll do the reverse calculation and we'll add up the number of days. So for the month of March, you have 31 days, February 28 days, January 31 days, December 31 days, November 30 days, October 31 days. So the total is how much? 182. 182. In other words, if you put an asset to use, listen to me very carefully. Have you understood from 1st October to 31st March that would get you 182 days? Okay. Now, if you put an asset to use on 1st October, we can say that asset is put to use for 182 days. If you put an asset to use on 2nd October, we say that it is put to use for 181 days. If you put an asset to use but it is put to use on 1st January 21. Which date? The fifth case, 2021 is the year of acquisition. See, in the first, second and third case, year of acquisition and year of installation are same. But in the fourth and the fifth case, year of acquisition and year of installation is different. 2021 is only the year of acquisition. You have not put an asset to use. So 2021, you are not going to get depreciation. But 2021 is the year of acquisition. The half rule is required to be applied. It can be applied only to the year of acquisition. 21-22 is the year in which the asset is installed. But 21-22 is not the year of acquisition. It is which year? Intermittent year. It is intermittent year. Are you understanding this? So 21-22 is an intermittent year. Intermittent year, irrespective of date on which you put an asset to use, you will get full depreciation. Is that very, very clear? You mark this point number 5 as very important. Day before exam, if you don't refer this, 100% you are going to do the mistake, and definitely examiner would ask you only the fifth case. No one is going to ask you first any of the case out of the first four. Examiner definitely would try to cover the fifth case. Now, have you understood very clearly? So there are a lot of such points when it comes to income tax subject, different chapters. There are a lot of points wherein you may feel that you have understood. Actually, you might not have understood. So that is the reason we take illustration. So what we are discussing, actually, which topic we are discussing? Conditions which are required to be fulfilled for claiming deduction with respect to depreciation. First condition is assessee must be owner of the asset. Second condition is asset must be used during the previous year for the purpose of business or profession. Is that very clear? Now the third one is the asset in respect of which depreciation is claimed should belong to either of following categories. In this point, we are going to understand how to make the block asset. In the distinction, accounting depreciation versus income tax depreciation, first point itself, I told you that in accountancy, we calculate depreciation on individual asset, whereas in income tax, we calculate depreciation on block of asset. So now the time has arrived that we should understand how to make the block of asset. How to make the block asset. So there are 3 steps when it comes to making the block asset. There are 3 steps. Step number 1. You decide the category of asset. There are 3 steps in making the block asset. Step number 1, you decide the category of asset. Asset is divided into 2 categories. Either an asset can be tangible or it can be intangible. So first of all, you have to decide whether an asset is tangible or intangible. This is my step number 1. Then within the step number 1, you decide whether asset belongs to which class of asset. So within the category itself, you have class of asset. Inside the category, we have class. So that is step number 2. You decide the class of asset. All tangible assets will be divided only into 4 class of asset. In income tax, we don't have 5th class of asset for tangible. So we have 4 class of asset: building, machinery, plant, furniture. Building, machinery, plant, furniture. Every intangible asset we should put that in, every tangible asset we should put in any of these class. So this projector, this camera, everything will be required to be put here only in some of the, in one of the class of asset. So we need to understand which asset we should put where. But right now broadly you can understand that tangible asset will have 4 class of asset: building, plant, machinery, furniture. In accountancy you use the word plant and machinery. Here plant is different, machinery is different. They are using the word plant, machinery. So this is second step, decide the class of asset. In case of intangible, we have different class of assets. Number 1 is know-how. Do you understand know-how now? Know-how. Know-how means technical details about the product. For example, it's Tata Motors, automobile sector. Tata Motors will be making cars. For example, Tata Motors have decided to launch a new passenger vehicle, sports utility vehicle. So first of all, the designer would design the design of the car and chalk out the design on a piece of paper. Then the one model of the car will be built. On a testing basis, one car will be made. So based on the design of the car, and then engineers would also make drawings as to which part should be placed at which location. In the car, which part should be fitted at which place, that will also be decided. A diagram will be drawn. So engineers will draw the diagram as to which part should be placed where. The car designer would make the design of the car, and then one model of the car will be developed. The design of the car and placement of each and every part of the car, basically drawings. See, every car may not have same spare part at a same place. The seats will be located at the same place. But inside the car, every part may not be located exactly at a same place. See, car is having 4 wheels now, so you have to always ensure that it is equibalanced. So you have to see what is the weight of a particular part, and you have to ensure that I should fit this part where, so that all the tires will have a equal weight. See, if you put more weight on the back side instead of car, it will become an aircraft. So moral of the story is, the designer will design the body of the car, the engineers would make the drawings with respect to where to fit the particular part, and all these designs and drawings is nothing but a technical details about the car. This is a secret information. This is a secret information. This will be registered and you will get a, this is called as know-how, technical details about the product. Another example can be Domino's. You go wherever throughout the country, if you have Domino's pizza, everywhere you will get the same taste because the recipe is fixed. The person who is baking the pizza is not required to apply his mind. Clear instructions are given to him. A standard operating procedure is made, and they do not make the sauce there. There is a industrial area wherein Domino's might have made a very big kitchen. There they will be making the sauce, they will be making the flour, and these things will be sent to the Domino's shop. There only they will do the baking part, that's all. So all ingredients will come from a factory, which is a centralized location for all these are licenses. Franchising. Say for example, you have paid 50 lakh rupees to McDonald's and you have taken the franchise of McD. So that one-time cost of 50 lakhs which you have paid is nothing but a franchisee cost for you. That should be considered as a separate intangible asset called as franchisee, and you can claim depreciation on that. Then we have any other business also. See, in intangible, there are 6 defined class of asset. There are 6 defined class of asset. The rest all are undefined. For example, you don't have your favorite asset here, goodwill. So that goodwill is also an intangible asset, but it will have a 7th class. So any other means beside these 6, if you come across any other intangible asset, you can make a separate class. Any other, either business right or a commercial right of similar nature. For example, goodwill, or another example can be in case of airline industry, every airline company would be required to acquire the landing rights. See, it is not that wherever you see that there is a sufficient space on the airport and you will do the landing. You will not be allowed to do the landing if you don't have the landing rights of that particular airport. So you have to acquire the landing rights from the Airport Authority of India. You have to pay money for that. So if you don't have the landing rights for Mumbai, then you can't run flights to or from Mumbai. So airline company will have to pay money to the Airport Authority of India for landing rights. Or maybe if you are into a seafood business. So on a commercial basis, you are exploiting this business. So you'll have a very big ship. That ship will go into ocean and then you catch the seafood. For that also you need a license, permission from the government. That is also an intangible asset. So you can have n number of intangible assets. So government says 6 we have defined, rest all are not defined. Different nature of business, you can have different assets. For example, one more example I'll give you. See, in case of your personal vehicle, taking that personal vehicle, you can travel at any place. No permissions or there are no restrictions. But if you are having commercial vehicle, taking your commercial vehicle, you cannot go to any other place. If you want to go at any other place, you will have to get a permit for that. I am not observed in Chennai, but behind the vehicle, the location is written. Have you observed sometimes? Behind the commercial vehicles, behind the autos, or maybe behind the taxis, the driver would put the location. For example, I could not explain you. For example, in Mumbai, behind the cars, generally it would be written New Bombay, Panvel, Bhayandar. These are three different locations. When it is clearly mentioned that New Bombay, Panvel, Bhayandar means that vehicle can go to that three places only. So if the passenger says you that I want to go to some other location, then you cannot take that vehicle, because that is a commercial vehicle that is allowed, that is permitted to go to a specified place only. So commercial vehicles need to acquire the permit from the government, and whatever permit they get, they can go to that locality or that place only. Have you observed sometimes on the tempo or a truck, they have written All India permit? Have you observed sometimes? They write All India permit, means they are having permit throughout the country. So that vehicle you can take at any place in the country. So that permit is also called as an intangible asset. I'm just trying to explain that you can have different categories of intangible asset, different classes of intangible asset. 6 are defined, rest are not defined. So what we are trying to understand, how to make the block of asset. Our step number 1 is what? Decide the category of asset. Step number 2 is decide the class of asset. And step number 3, then you make the block of asset. Then you make the block of asset. What do you mean by block of asset? Listen to me very carefully. Block of asset means group of asset having the same category, having the same class, and having the same rate of depreciation. 3 things should be same, and then you make the group. That group is called as block of asset. 3 things should be same. Number 1, category should be same. Number 2, classes should be same. And number 3, depreciation rate should be same. For example, say for example, colleges are reopening on 15th of June. In the college, you have science, commerce, arts, every field, and you have from 11th standard to the last year of BCom, that is graduation. Now 15th of June, college is reopening, so every student will reach the college. Now he has to go to some classroom and sit now. Who is going to tell him which is your classroom? Something should be displayed on the notice board so that student decide that this classroom I belong to. Say for example, you went to the college for the first day, on the day of reopening, nothing was mentioned on the notice board. And the announcement came, you have to stay here only in the ground, open space. In 5 minutes time, your lectures would start. So today we will be learning biology. What about the commerce students? Will they say, I paid for commerce, that's okay, but I'll learn biology? No, no. So what you need to do? You need to make a group of students. For taking the lectures, you need to make a group of students. For that, first of all, you will decide which stream they have selected, whether they have selected commerce, arts or science. Thereafter, once you have decided the stream, thereafter you will classify the students based on the standard, whether they belong to the 11th standard or the 12th standard, so on and so forth. Once you have decided the standard also, then you will bifurcate, then you will make the group based on similar percentage. For example, all those students who have scored 75% or more, they will be taken to a separate division. We name it as division A. There now 75% or more who has scored now, comparatively more studious. So even if you put new teacher now, not having huge amount of experience, he will be able to easily manage the class. because he has to just teach them the subject. Class control is not required because students who have scored 75-80% marks would generally be studious, they would be self-disciplined. Second division for those who have scored anything within the range of 60% to 75%. Third from 50 to 60%, and the fourth division will be for those who have scored somewhere between 35 to 45, 35 to 50. This would be the dangerous group. So here we need to make a separate division, and we should send a teacher who is very much experienced. If the new teacher is sent to this batch, then students will do the ragging and teacher will have to run away. So what is this division? What is this division? Division is nothing but group of students who have selected the same stream, they belong to the same standard, and they have scored similar percentages. Either they are first class or second class, whatever the class is. Similarly, here when we say block of asset, it is nothing but group of asset having the same category, same class, and same rate of depreciation. Is that very clear? Let's try to take an example. These are the rates of depreciation. I already told you that the rates of depreciation are prescribed in the Income Tax Act. Accountancy will decide the rate of depreciation on a judgmental basis. So this rate of depreciation, today I will discuss only this part. The remaining, you should read it once at home. So take this as part of your homework for today. You have to read this at home. Entire page number 108. You are taking as part of homework. So I'm going to take one example to make you understand how do we make the block of asset. For that, it is utmost important for us to refer to the rates of depreciation. So we are referring to the rates of depreciation. Point 1 says, in building itself, point 1 says, building used mainly for residential purposes, except hotel and boarding houses. Are they talking about the building in which you are residing? No. For that building, you are not going to get any depreciation because that is used for the personal purpose. Here they are talking about those buildings which are given to their employees as a staff quarters. The premises or the building which you give to your employees to be used as a staff quarters, those are building of residential natures. Residential nature, correct na? So staff quarters are of residential nature. The rate of depreciation in that case would be 5%. Then we have point 3, building for installing plant and machinery, and this is forming part of a water supply project or a water treatment system meant for infrastructure facility. See, for supplying water, for storage of water, you constructed dam, dam. It is a cement superstructure. That should also be considered as building only. It is a cement structure that should also be considered as a building. Similarly, if you have a water treatment plant, if you constructed something of cement, concrete, then that should also be considered as building. So for that building, the rate of depreciation would be 40%. Or building which are of temporary nature, temporary erection such as wooden structure. In Chennai, I have not observed, but in Mumbai, see, sometimes on a footpath, on a pathway, on a footpath, we have small shops which are made of wooden structure. That is also a building, but it is a temporary structure. So it can be shifted from one place to another, or for example, metro construction is going on in Chennai. If you observed, during that construction of metro, a big container will be lying on the road. A very big container would lie on the road. That container is not for putting some raw material or something. That container is a residence. On that big container, AC is installed, there is a door. If you go inside, it is a residence. So all these engineers who are working for 18 hours a day, 20 hours a day, sometimes they don't go home for 6-7 days continuously, they'll be allowed to stay there. A residence is created there. On the road, there'll be a very big container. Have you seen that train containers? No? Similar to that, a very big container will be installed, will be kept on a road itself. But inside, the moment you get inside, you will never realize that you are on a road. AC will be installed, there will be a bed, every facility would be available. So that container is also a building, but it is a building of temporary nature. Therefore, the depreciation rate would be 40%. Have you understood this? Vanity vans are movable. They should be ideally considered as a vehicle rather than building. Definitely it can be used as a residence also, but by nature it is more proximate, it is more near to category called as vehicle rather than building. But if the restaurant is not moving, if that van is not moving, it is, for example, in Punjab, there is one person, what he has done now, he acquired a aircraft body he acquired. It was a scrap. He acquired an aircraft body. That aircraft, then it was kept at a particular place and a hotel was made inside that aircraft. So that aircraft is not going to move. That can be considered as building. But if you have the tires in the vehicle and it is moving from one place to another, then instead of building, it should be considered as a vehicle. Is that clear? So wooden structure, temporary buildings, the rate of depreciation would be how much? 40%. And if your building doesn't belong to point 1, you cannot classify into point 1, you cannot classify into point 3. It will get automatically classified in point number 2. So all the buildings which are office building, factory building, godown building, warehouse building, hotels, boarding houses, all this will have a depreciation rate of 10%. It will have a depreciation rate of 10%. Is that very clear? Now, for example, are you aware about a company called as Godrej? In Mumbai, there are 2 stations in a central line. There are 2 stations, Ghatkopar and Vikhroli. Between these 2 stations, Godrej is having a huge plot of land. They might be having around 250 buildings, minimum 250 buildings. Out of those 250 buildings, approximately 200 buildings are staff quarters. Those are given to employees to reside. Remaining 50 buildings, out of 50, 40 might be say for example, some is factory premises, office premises, some is godown, and some is a showroom building. And maybe 8 or 10 buildings they would be having as a temporary structure. So in all, say for example, they are having 250 buildings. Those 250 buildings are required to be put into 3 groups. Number 1, of residential nature, 200 buildings. You make a group of those 200 buildings, that would be considered as a block. Then make a group of 40 buildings. You make a separate block. Building block 10%. Temporary structure 10 buildings. You take the value together, that will be considered as a separate block. Building block 40%. Is that very clear? So building can have how many blocks? It can have 3 blocks. Number of blocks would be equal to the number of rate of depreciation. Since in building we are having 3 rates of depreciation, we can have 3 different block of buildings. Is that very, very clear? So what do you mean by block of asset? Group of asset having the same category, same class and same rate of depreciation. Is that very, very clear? So this we have completed point number 3. with this, our discussion with respect to conditions which are required to be fulfilled for claiming depreciation deduction is over. 3 conditions are required to be fulfilled. Now, this part is not important for the examination, only for your better understanding of the provisions of Income Tax Act. I am going to explain you very quickly. So please focus here. Speed will be slightly higher. In income tax, there is a definition of building. I told you now, Godrej is having used parcel of land. Around 250 buildings are there. So, in that plot of land itself, they will have a pathway, na? They will have a road for going from one location to another. They will have a road, and those are not public roads, they are private roads. Constructing road would require huge amount of investments. So, that road belongs to Godrej, that road is owned by them. So, ideally, constructing road is a capital expenditure. So, they should get depreciation. But that road will fall into which class of asset? Is it building, plant, machinery, furniture, what it is? So, actually, if you just look at the class of asset, you say that road cannot fit into any of the class of asset. But government has given you the definition of building. And this definition is an inclusive definition. You know that, na? The definition which is inclusive in nature, its scope will be much wider as compared to the exhaustive definition. So, inclusive definition, the word building is defined in an inclusive manner, means whatever you understand it as building is definitely a building. But besides that, there are certain things which you don't consider to be a building will also be considered as building for the purpose of Income Tax Act, for the purpose of depreciation. Have you understood this? So, it says building include road. Which road? Private roads, not the public roads, because those are not owned by you. Building include bridges, culverts, wells and tube wells. All this would be considered as building. The rate of depreciation will be what? For road, bridges, culverts, wells, tube wells? 10%, because it is not residential nature or a temporary structure. So, it is residuary category 10%. Is that very, very clear? Machinery. Machinery is not defined in the Income Tax Act. Government says that there is no need to define machine. There is no need to define. You can understand it by normal meaning. But everything is not machine. So, machine means, when you hear the word machine for the first time, what comes to your mind? That there might be some structure, and if you put something in that, processing will be done and you will get a different form of product. So, for example, flour machine. Flour machine is a machine wherein you put the food grains and grinding will be done and you will get a flour. So, government says there is no need to define machine. Whatever meaning you understand by the word machine as per the dictionary, that itself is the meaning of machine. But government has defined plant, and plant is defined in an inclusive manner. What do you mean by plant? Plant is nothing but a group of machines working together in a coordinated manner. For example, soft drink bottling unit. Soft drink bottling unit. There will be a big tanker, in that soft drink will be made and then bottles will be filled up. So, we have a chain machine, a group of machines. The job of first machine is to ensure that the bottles would come in a queue. In a disciplined manner, bottles will come in a queue. That is the job of a first machine. So, there are a lot of bottles lying here. Job of first machine is to pick up the bottle and make the queue of the bottle. Second machine will take the bottles on the first machine, then it will shift the bottles to the second machine. Second machine, there will be a tap. That tap will come on a bottle, then soft drink will be filled up. Then once again tap will go away, bottle will once again go to the third machine, a cap will be fitted, and then fourth machine will fit that bottle into a tray or a rack. So, this machine is function, this is plant, because plant is nothing but a group of machines working together in a coordinated manner. Similarly, we have car assembling unit. Car is not manufactured, it is assembled. So, if you see the entire factory of the car, you will have a car, the stage 1 car will start get assembled from this place. A body of the car will be kept here. Then it will move on to the next machine, and that machine will do some welding, etc. A third machine will put the doors on the car. So every machine have its own unique job, and all the machines put together will make a plant. So plant is nothing but the group of machines working together in a coordinated manner. This is the general meaning of plant as per dictionary. In income tax, we have an inclusive definition of plant, which says that plant includes ship. See, if government would not have made such a definition, then all the shipping companies, they would not have got depreciation on their ships, because ship doesn't fit into either building or plant or machinery or furniture. Therefore, government says plant includes ship, plant include vehicle. Plant include vehicle. So all the vehicles are considered as plant. Plant include books. So you were carrying plant in your bag since last 10-15 years, you did not realize. So plant include book. Books owned by whom? Lending libraries, etc. Those people for whom book is a fixed asset. For generally book would last for not more than a year. Then it is a revenue expenditure. But there are some books now, old books. For lending library, those books are considered as fixed asset. So for them, they can claim depreciation on books. That books will be considered as plant. Plant includes scientific apparatus. While doing the research, for example, Serum Institute of India was doing the research for COVID-19 vaccine. So whatever apparatus they are using for research, that is called as scientific apparatus. That will also be considered as plant. And surgical equipments. Surgical equipments, you understand, weapons used by the doctor, knife, etc. Not normal life. So all these things will be considered as plant. Used for the purpose of business profession, but it does not include. Plant will not include certain things. Number 1, it does not include tea bushes. Actually, which is plant is not considered as plant, and those things which are not plant, they are considered as plant. So tea bushes is not considered as plant. Why so now? Whatever you earn from agricultural activities, those incomes are exempt from tax. Since we are not levying tax on any income, you can't say that tea bushes you give me depreciation deduction. You don't have income only, your entire income is exempt from tax. So we say that tea bushes you can't claim depreciation. Number 2, livestock. Livestock is not considered as plant. So in a dairy business, if you are having livestock, you can't claim deduction for depreciation. Why so now? Because in case of livestock, we have a separate section, section 36 subsection 1 clause 6, which says that if you purchase the livestock, in future either you will sell that livestock, or maybe livestock has died, so you sell his dead body. In both cases, you are going to realize some amount of money. See, human beings' dead body cannot be sold. Throughout your life, you might have had a lot of bhel puri, pani puri, etc. So everything is rubbish inside. It cannot be sold. If a person dies, you have to burn him. Otherwise, the body will smell like anything. And if dead body of animals can be sold and used for commercial purposes, human body cannot be sold. So, say for example, in a dairy business, someone has purchased 5 cows. Out of 5 cows, 2 cows are died. So he has sold off the carcasses, dead body. Say for example, that individual acquired 5 cows for 1 lakh each. Out of that, 2 cows, they are died. So he sold the dead body for 5,000 rupees. So there is a loss of 95,000. That entire 95,000 will be allowed to as deduction in section 36 subsection 1 clause number 6. Right away entire amount will be allowed as deduction either in the year of sale or in the year in which you sell the dead body, in which you sell the carcasses. So if we are anyway going to give you deduction for the difference between the cost price and the selling price, and then at the same time we give you depreciation also, that would tend to amount to double deduction. Are you understanding? That is the reason government says plant excludes livestock. Last point, plant excludes. See, plant excludes four things. Four things are excluded from the definition of plant. These four things would not be considered as plant. So you can't say that this is plant and you can't claim depreciation on this. Plant excludes tree bushes, plant excludes livestock, plant excludes building, and plant excludes furniture and fitting. Now you may say that why there is a need to write that plant excludes building and plant excludes furniture fitting. Anyway, for building and for furniture fitting we are having a separate class of asset. Why there was a need to clearly define that plant will exclude furniture and plant will exclude building? Few years back, are you trying to understand what? See, no one is going to ask you the definition. It is just for your knowledge I am explaining. I am going to take maximum now 2-3 minutes. I will share with you the reason behind why such definition is made, why the word plant specifically excludes building and it specifically excludes furniture and fitting. In one of the case, there was a doctor who had his own hospital. He constructed a hospital building of 3 floors and it costed him say 40 crores. First floor was constructed at a cost of 10 crores. Second floor was constructed at a cost of 10 crores. And the third floor had only operation theatre. It was constructed at a cost of 20 crores. So building was constructed. There were some machines which were fitted to the wall. So those machines were now part of building only. So what that doctor did, for the first floor and the second floor, he incurred a cost of 20 crores for constructing that building. He considered that first floor and second floor as building only. And he claimed the depreciation at the rate of 10%. The second floor he claimed that second floor of the building actually is not a building, it is a plant. Because that part of the building, that is second floor, is having some extra facilities. It is having some special facilities wherein we can operate on a patient. So it requires certain special facilities. So that part of the building, that is second floor, we have a superstructure of concrete, that is cement. Plus we have installed lot many machines there, which are now part of building. They are attached to the building. So that entire second floor he considered to be a plant. And at that point of time, in those days, the rate of depreciation for plant was 25%. So you claim depreciation considering it as building at 10%, 20 crores, 10% would be 2 crores. But if you consider that as plant, then the depreciation would be 25%, that is 5 crores. So you get more deduction to the tune of 3 crores. Your income will fall by 30% of 3 crores. So you will save tax to the tune of 90 lakhs. This happened in case of one of the doctor. He claimed to be second floor to be the plant because he said that entire second floor is a operation theatre. Now the case went up to the High Court, and High Court said that plant is defined in an inclusive manner. We do not know what is the general meaning of plant. So income tax officer was asked to explain what do you mean by plant. So income tax officer says plant is nothing but a structure wherein you put some raw material, some processing will be done, and then you will have an output. So plant is a structure wherein processing will be done. Having a look at this stand, doctor said that our building is also a plant. We have input, processing, output system. when a patient is admitted, we first of all take him to the reception area. So he'll fill up the form, he'll be admitted, then we'll allot him some room, and then on a particular date, there is a time of processing. So we'll take this patient to the plant, we'll put him into the plant, some processing will be done. Once the entire processing is over, we'll take him out. Then 2 days he'll stay in that warehouse, and then dispatch will be done finally. So doctor proved that you mean to say plant means there should be some 3-stage mechanism, input, process, output. In our case it is same. It is just that you are not in a position to accept it. So court said that yes, he has proved this is correct. So that second floor should not be considered as building, it should be considered as plant. So court gave the decision in favor of SSE, and that SSE claimed depreciation on the second floor of the building at the rate of 25% instead of 10%. One more case happened in the state of Gujarat, wherein there was an individual, he was a theatre owner, movie theatre. He was owning a movie theatre. He said that my entire building itself is plant. We also have input, process, output mechanism. So there is a ticket sale counter, that is the input area. Customer will come there, he will purchase the ticket. So input part 1 is over. Then we will put him inside the plant. 3 hours we will do the processing. Once it is done, we will throw him out from the exit gate. So that is output. Input, process, output. So this entire building is a plant. That is what he claimed. And Gujarat High Court also gave the decision in favor of the SSE. So that theatre owner claimed the depreciation on the entire theatre building, considering it to be plant. He claimed depreciation at 25%. Looking at such kind of cases, government was afraid that in India we will not have any buildings anymore. Everything is going to become plant in a span of next 2-3 years. That is the reason government came out with an amendment in the definition of plant, and government specifically excluded building from the plant. Therefore, the definition says plant excludes building, plant excludes furniture. So earlier, the table, the wooden table which was lying in the operation theatre was also considered as plant only. Now that wooden table will not be considered as a plant, it will be considered as a furniture. Is that very clear? Last point. There are certain assets which do not fit into any of the class of asset. There are certain assets which do not fit into any of the class of asset. On those assets, you can't claim depreciation reduction. For example, livestock is excluded from the definition of plant. Now, livestock is neither a building, nor machinery, nor furniture, and it is also excluded from the definition of plant. So, livestock, you won't get any depreciation. Number 2, land. Land is a non-depreciable asset. See, there is a difference between a land and a road. Road requires a construction. Land doesn't require a construction, it is natural. So land is a non-depreciable asset, but road, airports, etc., they are depreciable assets. So roads are part of building, but land is not part of building. So land is a non-depreciable asset. You can't claim depreciation reduction on land. Is that very clear? So there are certain assets which are not forming part of any class of asset. On that, you won't get depreciation. Those would not form part of any block. Is that very, very clear? It needs to be remembered that assets which do not qualify for depreciation, such as land, personal assets, livestock, etc., they will not form part of any block of asset. Is that very clear? So with this, we have completed what? We have completed 3 conditions with respect to claiming depreciation reduction. We have also completed the definition of building as well as plant. Definition of block of asset is also over. Block of asset is nothing but group of asset having the same category, same class and same rate of depreciation. And below that we have the table which is giving you rates of depreciation. Question may arise in your mind, do I have to remember these rates? Answer is yes. So this as of now I have given you this as part of homework. So today you will refer to this and tomorrow we'll have a glance at it. See, it doesn't require much of explanation. There are a lot of technical things which I also will not be in a position to explain you, but you refer it once, we will discuss tomorrow. So depreciation rates, see, when I say homework, actually you have to do it, please. Otherwise there is no point of giving the homework. So this rate of depreciation table you have to refer as part of your homework. Next we have section 43 subsection 6. Section 43 subsection 6. This is the definition of WDV.